So I want to talk about something very, very interesting. So Zimbabwe has got one of the world's highest inflation rates. We're going to hear the numbers that we're looking at. But how do you survive in such an environment from an insurance perspective? And today I want to talk about life insurance in a hyperinflationary environment. So when you tell people about life insurance, they'll tell you, there is inflation, I won't be having my money, etc., etc. But this is a conversation that we can't afford to miss. Remember, the point that was made is whether or not there's inflation, there is need for the particular solution that insurance usually provides. Life insurance, short-term insurance. So let us say this very difficult conversation. Last time we talked about loss of value, but today we're going to talk about something a bit more technical on hyperinflationary environment. And with me is Mr. Fai, the Secretary General for Life Officers Association. Mr. Fai, thank you so much for coming through to this particular podcast. So we're always putting you on the spot so far as these topics are concerned. But we really benefit a lot from the experience that you have and the wisdom that you share with us. So we want to understand hyperinflation, because many people, they hear about hyperinflation, but very few people actually get to know what is actually meant by hyperinflation and how does it differ from regular inflation.
Hyperinflation is it's a worldwide phenomenon.
Yep.
It's a rapid increase in prices of goods and services.
Yeah.
Rapid, I want to emphasize that. And loss of purchasing power.
Yeah.
And trust in a currency.
Very interesting. Trust in a
got
currency.
a rapid increase in goods and services, loss of purchasing power, and trust, loss of trust in your currency. That's your hyperinflation.
All right. So how does it differ from...
In terms of numbers, I'll go to that. In terms of numbers, hyperinflation is defined as 50%. If you've got inflation rates of 50% per month.
Per month.
That's, you are getting into the hyperinflation area.
Wow.
Or at least 100% annually.
Okay.
That's hyperinflation. It also involves its rapid devaluation. We are aware of that. Rapid devaluation.
We've
experienced that.
Yeah.
Severe reduction in purchasing power.
You have money, but you can't buy anything.
You can't buy anything. The value of money just goes down.
Yeah.
You also have a heavy disruption of economic activity. With it comes heavy disruption of economic activity, unemployment, and all the bad activities related to what do you call it? Related to the high inflation.
Yeah.
We've talked about loss of faith in currency.
Loss of trust.
And trust. Now, where is it happened and at what rates?
The statistics.
I'll start with the third
highest.
Yeah, third highest.
In the world.
In the world.
Okay.
We're talking of Brazil. In 1994.
94?
Yeah. They had an inflation rate of 1,477%.
In a month?
Annually.
Wow, that's a lot still.
1,477%. Then we come to our friend Maduro, Mr. Maduro. That's Venezuela.
Okay.
They had an inflation rate of 1 million%.
1 million%
in 2018.
6 zeros.
Yes.
Okay.
Then we come to yours truly. We had 889.76 trillion% in November 2009.
Okay, let's simplify. We said 6.
I don't know how many zeros. 6 trillion.
Okay, 6 trillion.
Reality.
Yeah.
This happened.
That's very interesting.
Mm.
Yeah.
889.76 trillion.
Wow.
It's a record. And seriously, one price at 9 o'clock, another price at 10.
Yeah.
And these retailers were employing people to change prices every day.
So I just went on ChatGPT. 6 trillion is 21 zeros.
Yeah.
Yeah.
That's
21 zeros. Oh, okay. Wow. But I remember the time where people would give you a quotation for hours.
Yeah.
They will not give you for the whole day. They say the quote is only valid for 12 hours.
Yes.
Or 5 hours.
Yes.
If you come somewhere.
Day after it's changed.
Wow.
Yeah, it was madness. But we went through it.
Yeah.
Yeah. And we're still here. Thank God we are here and we gone through that.
That's very true.
That's a hyperinflation.
Yeah.
Now, it affects everything.
And everyone as well.
Yeah. It affects your life insurance. It affects your funeral policies.
Yep.
It affects your car insurance.
Yep.
It affects your day-to-day. You buy something at 1 million in the morning, in the afternoon it's 2 million, it's 5 million, it's pervasive.
You can't even lend. It's very difficult.
So it affects everything. You can't plan.
Yeah, it's very difficult.
Yeah. Now imagine an industry whose success is based on long-term planning.
Wow.
On 10 years, 15 years,
And
20 years.
21 zeros.
And things are changing by the minute.
Yeah.
It creates a very difficult environment for them to survive.
Yeah, because now it's like you're dealing with a moving target.
Yes.
Yeah, it's always shifting.
You see?
Yeah. So let's talk about the impact of hyperinflation on the economy and individuals' financial stability. What is the impact really?
Like I said, it affects everything.
Ah.
Imagine everything that is there in your life, economic, financial planning, it's all there. It's all affected.
Yeah.
You can't plan.
So tell me, how did insurance...
You produce, for instance, a farmer produces a crop today and they want to sell it next month. Situation has changes. The cost that they used to put down to produce that crop, and it's
more than what you're actually being paid.
Yeah.
Yeah, it was now at that rate of inflation, even if you are going to be paid anything, especially where you're told will be paid after 7 days or 30 days.
Exactly.
The money becomes useless before it even arrives. And the other part, we already has got the product. Their duty is simply to deposit what you agreed.
That's how pervasive it was. It affected them.
And you can't even sue them for breach of contract.
No, you can't.
That's the most painful part. They've performed. I know someone who was refunded. They bought a property, then the deal was cancelled, paid in USD, then SI 33 comes in.
It was devastating when it came to properties.
And they were paid in Echo Cash.
If you were unlucky to sell your property,
yeah,
and then everything happens,
yeah,
that money could lose value whilst it's
rapidly
with you.
In fact, many people's money, some would go through lawyers, conveyancers. Before
We'll
even
take
the
their
trust.
time.
They are holding your money.
In trust.
In trust. And you see what's happening out there.
It's all good.
And you've signed the transfer documents, but there's nothing happening.
Yeah.
So, but one of the questions is how do insurance companies actually survive in such a hyperinflationary environment? Because you know what? I know people want to attack insurance companies, but I also think they've got a very difficult job. Because imagine carrying all this risk. And one of the risks is your responsibility somehow is to be able to absorb claims when they come. But now, the risk now is actually coming from inflation. How are they actually surviving in a hyperinflationary environment?
Yeah, I would want to talk about in process of
Yeah.
answering that question, how this environment affected life insurance companies.
Significantly.
There were regulation challenges.
Yeah.
For instance, life insurance companies are supposed to have a prescribed asset ratio of 15%.
Wow.
15% of their assets should be in government investments.
Which are also prone to hyperinflation.
Yes.
Wow.
So how do you keep touch of of something that is changing so fast?
So prescribed assets, these are the ones that ensure that you're compliant.
Yes, you have to be compliant to prescribed assets.
Yeah.
Meanwhile, you had a base that is changing so fast, and you're busy calculating. So it created a lot of challenges.
Serious ones.
Yes. Remember, I've talked about investments where they put money in.
Yeah.
Imagine having put money in stocks, and there is a halabalulu there happening in the stocks. Policyholders' money.
Wow.
This is not your money.
It's trust funds, actually.
This is money from the policyholder, and you've invested it with all the confidence.
That is going to
In a
save.
stock that is that all of a sudden becomes a problem. It also created lots of problems in retaining customers for these life insurance companies. Why? Because one, there is unemployment. Because with that hyperinflation, employment will definitely go up.
Yeah, definitely.
So a lot of customers will cancel their policies. Can't retain them.
Yeah.
Some of them are failing to pay because of the premiums are changing. I've had during that period a lot of people saying, "No, I give up on this one because I don't have the money to pay."
Yeah.
It's changing. It's
Like now, if I think you're receiving messages almost monthly that your premium is going up. To
Yes.
preserve value
yes.
of your policy.
So
Yeah.
so the retaining customers
It's very
became
complex.
difficult.
Yeah.
Risk management itself became difficult. You have to be thorough, and you have to be reviewing it every now and again to make sure that you keep in step. There were also problems of cybersecurity. Yeah, when things are like that, you have those problems.
Yeah.
People using technology to steal people's money or to do things that are not. And then they have to adapt to the changing environment and fast changing environment.
Rapid agility.
Yeah. But most importantly, the needs of the people were changing
Yeah.
fast. Because this hyperinflation demanded a certain kind of values, a certain kind of products that you need to meet the needs of the customer.
Yeah.
And let me be honest with you, insurance products are difficult to change, like you would change diapers or things like that.
Yeah.
These are well researched,
Yep.
where there's a lot of input to come up with a product that meets the needs of the customer.
True.
You can't change them like fast-moving products. I managed some soaps for an international company in the past, and I know of a story that, for instance, if a product like a bathing soap in Japan, I was told, in Japan, if a competitor launches a new product, a competing product today, 72 hours, another competitor will launch a similar product.
Wow.
That's how fast they can respond to. And you're talking of coming up with packaging, coming up with the pricing, coming up with everything. In 72 hours, a product is there. Insurance products take long to come up with.
Yeah.
So a fast-changing environment is not the best environment for for adaptation.
Yeah, true.
Yeah. And obviously, you also had to do a lot of training on your personnel to meet the changing needs.
True.
There's no way we could have managed to navigate this environment without well-trained personnel who know the science and the what's happening there before, and make decisions at the right time to keep to afloat.
Very important.
So it was a trying time for the industry.
Yeah, seriously.
Yeah. And then we got into the US dollar. Things were stable. People put in their money together, they invested, and boom, 2018 comes in. Gauge, 1 to 1.
All right, that's my favorite. yeah.
So yeah, we went through a difficult time, but we have to talk about this thing.
Not true.
Yeah.
In fact, I think our ability to have this candid conversation would actually shape decisions of the future as well.
Yeah.
Yeah. All right. Gauge. So let's talk about purchasing power of life insurance benefits. Yeah, because I've seen some people say, if you say it's a funeral insurance product, I'm not going. No, I heard someone say, no, you find a way. But want to talk about this from a consumer concern. How does hyperinflation impact the purchasing power of life?
I've got quite
insurance benefits.
Large number of areas of discussion in this particular area.
Yeah.
We obviously had to adjust certain policies as a country.
Yeah.
In order to be able to meet the requirements of the hyperinflation. Monetary policy, we've always heard about it.
Yeah.
And that's the custodian of the Reserve Bank. And they also did their best to try and control that hyperinflation. Fiscal discipline.
And that's the most important.
Yeah, we eat what we hunt.
Eat what we kill.
What we kill.
Yeah.
That's the word.
Yeah.
If you don't eat what you kill, it means you're printing money.
Money supply.
And what does it do? It fuels inflation. You get what I mean?
Yeah.
So there's a lot of discipline on the part of government to make sure that we keep within the same thing applies even now or in the past, and all this, the hyperinflation period, that is a critical component of a currency. Then you've got currency reforms. You can count many of them, can't you?
Yeah, I get it.
Yeah. At least in 2009, we went into a multi-currency arrangement. 2018, we came back and introduced our currency. Didn't do well. We phased it out, the RTGS, in 2023. Then we brought in the ZIG. And that's where we are. And those are currency reforms.
Yeah.
And obviously the intention is to try and control the hyperinflation.
Yeah, true.
Yeah, to stop the currency from losing value. Price controls can also come in terms of trying to control inflation, because I remember the late president, each time you'd come back and the prices had gone up, he'd say,
yeah.
And retailers would listen and go back to so price controls are also a function, something that comes in there. Then one major area where we had been successful in the past is international assistance. There are certain payments that we make and so on, and in the past there are what you call multilateral donors and those who give us money and who lend us money to finance our activities, they also help a lot in making sure the stability of the currency. And when you don't have that, you will struggle. We are under sanctions at the time, so that made things worse. And once you're under sanctions, then certain donors or certain institutions will not release aid or funds that can assist you to control or make sure that your currency is stable. So that's then we also have to look at investment strategies for the industry.
Yeah, that's very important.
We were struggling, but what kind of investment strategies do insurance companies use in this kind of environments? One is diversification. We need to diversify to make sure that we find inflation-proof investments, assets or things like that. But let me put it this way. During that time, it was difficult to get those assets. Those that protect value. The only one that was there is property.
Yeah, but there's
We
also
can't
limits.
put all our money
In properties,
property.
no, it's too risky.
And there are limits there.
Yeah.
So that was a difficult area as well. The second strategy, investment strategy that could have been used to protect the value of our investments is inflation-linked bonds. These are issued by the government. Yeah, and inflation-linked means they track inflation. The government was reluctant to issue these ones. They were reluctant. So we were not able, if I'm correct, I think we were not able to use these ones means of protecting. The third one is investment in foreign currency, or foreign offshore, investing in offshore. Again, we pushed this one and the government finally agreed to allow us to invest in
Offshore.
So if you have your assets, some of the investment you could be allowed to. But let me also put it that there are a lot of regulations and restrictions when you make offshore investments.
You can't put all the money there.
Yeah, for one, you have to get approval from the Reserve Bank. And, you have to. There are a lot of restrictions that take place there. So again, there is minimum investment that has gone through there because of those restrictions. Then investment in hard assets, that's the property. You invest in property, you retain value. And then there is a highly technical investment option, which is alternative investments. Equity hedge funds. I'm not going to try and explain this one, but it's an alternative of investment which tend to protect against inflation. That's where insurance companies could have put their money. Assets, the management of their assets is a means of protecting against hyperinflation. You have to review every now and again your investment options because the market, the situation, the economy is changing fast. You've got to see where you have placed a certain amount of money in bonds, and you realize that things might be changing and you might be getting negative returns. You've got to be able to be swift and move it to where you think you get best returns so that whatever investments you have sweat for you. They could also consider duration of managing assets. Once they receive money or premiums, they place that money in an investment option. Now that duration of keeping that money in that investment option depends on whether you see whether there's brighter prospects or not.
Sure.
If they're not, you might have to reduce that duration of keeping that money in that investment option. And then you obviously have to be very strict in monitoring credit. You don't want to lose money that you have invested. And derivatives like that, talked of the hedge funds things and so on, can be also used. Product design is also critical.
True.
That they could use to but remember, I've also said that product design in life insurance,
It's a lot of work.
it's a lot of work.
Yeah.
It takes a longer period.
That's my put.
Yeah. So, but they could have come up with inflation-linked products.
Yeah.
Yeah. That could, respond to whatever inflation is coming in. They could also shorten the term of products.
To manage that.
That's another way.
Yeah.
If, for instance, you are looking at a 5-year term compared to a 20-year term, you are more flexible to adjust your risk
Sure.
in the 5 years than in the 20 years.
Yeah.
And then they could also have allowed policyholders to adjust their investments and premiums. I think that was happening, where they could write to you and say, your premiums are now
X amount.
and therefore your cover is also going to, based on the inflation. That could, solve the problem. Then risk management is another area that they could have focused on in order to be able to reduce the impact of hyperinflation. In risk management, I've talked of derivatives.
Yeah.
But I'm not at liberty to explain what derivative is, but they can protect against. Then they could also have transferred risk to reinsurers. Remember, I've said the LOA has got
life assurance
14 members and reinsurers, so they could transfer that risk and place it with reinsurers who have got capacity to place it abroad. So that risk is transferred, and then there's also, in risk management, there's also a concept called the stop loss arrangement.
Stop loss.
Yeah. This one is an interesting one.
Yeah.
This is what happens if you've ever traded on stocks or on currencies. What you do is you give a minimum loss. Let's say a stock is moving down or is losing value. You say at a certain level, let's say it's moving from $10 to going down in terms of value. You say at $7, I don't want to lose anything further than that. So at $7, I sell and then get the money and invest elsewhere.
Yeah.
You get what I mean? That's the stop loss strategy.
All right.
So that you are able to, but you can only do that when there are investment options that can be brighter, that can give you better returns.
Yeah.
So, yeah. Then I also want to talk about operational adjustments. Regular price adjustments, I think this was happening. Regular benefits adjustments. These were also critical because then they would make sure that the adjustments meet. Then regular review of expenses of running the institution were also critical. IT and data analysis were also critical things to consider during hyperinflation, because those were means of using or that you could use to control your costs and to assess data closely, so that you are able to make a
informed decision.
Data analysis and IT setups enabled you to monitor inflation trends, so that you know that we're going that direction. But 2009 was a tsunami. It was difficult
to do all that. Yeah.
You could use that to reduce expenses, and you would use that to engage customers more in data analysis and so on. And then obviously there were also requirements to partner with other institutions, like foreign institutions,
Yeah.
would bring in investments and things like that. We were obviously engaging with the regulator very often, closely. And other strategies used to reduce the loss of value is your favorite.
Yeah.
Diversify revenue streams.
So true.
Yes. So you find a lot of these insurance companies going into specific areas of
Yeah.
investments so that there are revenue streams that come into.
Yeah.
We also encourage you to develop inflation resistant products so that they could and then close monitoring and inflation hedging strategies were also critical in coming up with. So a coterie of these activities enabled our institutions to survive.
That's very important.
Yes. Those are the activities that they were regularly putting in place to make sure that they survived the
hyperinflation.
hyperinflation.
Yeah, and realize quick thinking becomes mandatory.
Yes.
But I also think, even from a regulatory perspective, that level of agility becomes very important.
It is.
You're talking about the prescribed assets. Now, with the realities on the ground, that it's just like you taking value, locking in a place where it's going to rapidly lose value, then at the end of the day, you have nothing. So I think...
Meanwhile,
Yeah.
it's a policyholder's money.
That's being wiped out.
It's not your money.
Wow.
So sometimes when our insurance companies make some decisions that do not sound to be logical or that do not sound to be, it's because they are driven by protecting the policyholder's money.
Yeah, because you're actually holding it in trust.
Yes. If you lose it, they come after you and say, you lost that money.
We want our money.
We want our money.
And they actually justify it.
Yes.
Yeah.
So sometimes we have to make sure we do the best in order to protect that money.
Yeah, because if you make a promise that you're going to deliver this, and that's a representation that someone acts upon, they're actually entitled to say you defrauded me. Because I acted on your representation.
Yes.
Then now it's turning out that that representation was a misrepresentation.
So after 2009,
Yeah.
I can say we've learned our lessons and we've been doing our best to
Yep.
make sure that value is preserved.
And I think that's very important. Because when in an abnormal environment, it also requires abnormal thinking. And I think some of the policies, of course, they're policies, but I think they also need to be sensitive and quite aware to this reality on the ground. So I always focus on the consumer. I want to talk about consumer education and awareness. Why is it important for customers and consumers to understand the implications of hyperinflation on their life insurance policies?
Sometimes consumers and people out there want to ignore the conversation that value was lost because of the hyperinflation. But the reality is that's what happened.
Yeah.
And we've got to take that into account whenever we make those decisions, investment decisions and things. If you were invested in a savings account, your money was just wiped out.
It was not saved.
Yes. It was just wiped out.
Yeah.
It's the environment.
Yeah.
That's why I've coined it a national disaster.
Yeah.
We need to work closely so that we can improve the position of those people who lost that value.
Then, still on the customer, let's talk about, do we have any specific regulations that protect customers in a hyperinflation environment? Because I think this is one of the things that people are looking at. I think just building on the question on penetration levels, why are people becoming reluctant, etc.? Maybe they're also saying we're not aware of the environment in terms of the regulations that protect customers' interest. Do we have any such regulations that protect customers in a hyperinflationary environment?
We do not have specific requirements that do that, but insurance companies operate under regulation from government. And the coterie of regulations that the government has put in place intends to protect the customers. The enforcement of treating your customers fairly has been heavy, and IPEC, for instance, has been pushing that to make sure that our different players take heed of that and work on it and treat their customers fairly. Now, treating the customers fairly is making sure that we pay reasonable benefits against the premiums that we paid. Remember, the insurance companies promise to pay. That's what they're there for.
To pay.
Pay for claims and stuff. And therefore, that's what they should exactly do.
Very important.
Protect the value that is there, and when it is due, when the risk materializes, we pay.
And that's very important.
The Smith Commission that was set up in 2014 and came up with the results there. And we talked about who it blamed and things like that. And we have made commitments to make sure that we pay the portion that is blamed on us. And the different members are working on the different payment arrangements so that those who lost value will benefit. I can't say how much they will be paid.
But that's what people ask.
I cannot say how much will be paid. I have explained how value was lost. In equities, in cash, in
real estate as well.
So we do not expect payment in full, or not payment in full, but a full restitution.
It's not possible.
It's not possible, but we expect a certain amount of payment to the policyholders, and that is coming.
I would look forward to that. I think many people are quite keen. Is it going to be ZIG? Is it going to be US? If it's US, how much is it? If it's ZIG, what's going to be the rate that's going to be applicable? All right, so we've talked about hyperinflation. You've also given some very interesting examples in other countries, the top three, in terms of inflation, hyperinflation. But what does the future look like for life insurance in light of all this? I know definitely I'm not a prophet, but generally the indications from your study.
We address the currency issue. We stabilize our currency. The future is bright. We can grow this industry to new heights because we'll be able to plan.
Planning, predictability.
Long term. That's the critical thing. If we can plan for 10 years, 15 years, so that when I give you a policy today for your life and it matures in 20 years, you get the full value.
No stories, just your money.
No stories, just the full value.
I used to wonder why South African televisions, if you notice South African television, it's one insurance company after the
other.
I'm like, guys, what are they doing?
There's real value. And insurance pays. I wouldn't want to say profitable, but it protects you.
But it's also profitable in a way.
It is.
Because now if you were supposed to use $5,000, but that risk has already been taken, it allows you to use the resources that you'd set aside for other things. It allows you to actually use them for those other things.
But I heard a story in the South African market. A police lady was taking policies for her relatives.
Okay.
I think up to 6 of them. She would take a policy,
Yeah.
and the next thing you are dead. And she gets the payment.
Wow. Now that's insurance fraud.
It's this happened recently, I think last year or something like that.
You think that
She
actually
was
made
arrested.
those? Yeah.
She was arrested. The reason is
Yeah.
there's real value in that.
Wow.
Yeah, a life cover of 2 million rand, 4 million rand will go a long way.
Also, every time you should be a beneficiary.
I think she was now going after a mother or something like that.
Wow. I know that's witchcraft. but you see, the bottom line is it's a function of confidence.
Yes.
So when people believe that this is actually happening and they actually get to see the benefit,
Yes.
yeah, I think people begin to subscribe. And I also think it's quite imperative on the insurance players to also win people's confidence. I was talking to someone who was calling me, he says, no, I've got insurance with this company. If I've got an accident, they're only paying me 90%. What should I do? And I said, change the company. What was that advice?
Get to somebody who can give you a better return.
Simple. So the guy laughed. I'm like, no. Change the company. Because there's somebody who is actually able to say, if this is the quotation, if these are the assessments, we've done our own independent assessment, your damage is 5,000. They're actually able to pay you $5,000 because it all revolves around that. Then let's talk about product design. I think you talked about this a bit, but I think this is a message as well to insurance players in terms of the role of innovation in a hyperinflationary environment. What is the importance of product design and innovation, and also pricing in terms of survival and life insurance companies in light of these challenges?
Yes, I've said that product design is key. You want to make sure that you make the products that meet the needs of the customer.
Yeah.
And in an inflation environment, an inflation-linked product
is the best.
The best.
You don't need to worry about loss of
value.
You
don't need to worry about loss of value.
Exchange rate movements, you're okay.
Yeah, if you start at $100 and there's hyperinflation and it's now $1,000, you pay benefits equivalent to the $1,000. So you don't. So that's critical. Then for hyperinflation environments, short-term products.
Very, very important.
Yeah. And then maybe renewing them every now and again. It's critical. I talked to you about a friend in Uganda who said to me he's now 45 and he is allowed to access his pension savings.
Wow. At 45?
At 45. And you are saying, I'm going after it. I'll get that money.
Yeah, use it for something else.
Invest it in some, so that when I retire, I've got an asset that will be earning me some income.
Multiple streams of income.
Yes, so shorter term, allowing for shorter term planning.
Yeah.
Both for customers and for the insurance industry.
Yeah.
So that they're able to make sure that they monitor the risk and it doesn't run away because it's a long-term product.
That's important.
Then allowing policyholders obviously to adjust investments every now and again. That's proper. When you look at the need of a customer, you want to every now and again come to them and say, let's relook your portfolio.
And that's important.
How is it looking like? Let's adjust it.
How do we preserve value?
Yeah, and let's also make sure that the relevant payments that will come are adjusted to it. That So product design, innovative products that meet those particular issues are important.
True.
Yeah, and we've been encouraging our industry to look at that and come up with products that. One thing that has happened is a lot of our members have kind of moved from the mainstream life products to funeral.
Yeah, I think people really saw the benefit of funeral.
Yes.
Yeah.
But I think more importantly, funeral tends to be short-term rather than
long-term.
Very long.
Yeah.
The adjustments there that you can make in 5 years or in 10 years and it's shorter than a life policy that will materialize on your death.
Yeah.
Which would be 20, 30 years down the road.
Yeah.
So Yeah, and not only that, there's funeral services as well. Which provide real, tangible
Service
services.
that people can actually see.
Those buses, those
Yeah.
coffins, and what. People can actually see that, and so yeah. But when the economy gets back to normal, and we've got a stable currency, then we should be enjoy taking life insurance and
I think it's actually very important financial wellness too,
yes.
where you can actually say I have X amount in terms of my life assurance. And I actually know of people who take a mortgage and they actually secure it to their life insurance.
Yes,
Yeah, that if anything is going to happen, my life insurance is going to kick in.
exactly.
The balance is going to be cleared.
Yes.
My family is going to be okay. The balance can actually help in terms of helping the upkeep of the family. So we want to give some few takeaways to the people who are watching us right now. What are some of the key takeaways that you want to give to people to remember about the importance of life insurance
For
in
me,
a hyperinflationary environment? Yeah,
the loss of value is a national disaster.
it's a reality we can't run away from.
The industry and government need to work together to come up with solutions that address
Yeah,
the national disaster.
that's true.
We have made suggestions in the past that maybe we could come up with a fund spearheaded by government that can be able to take care of pensioners especially,
True. They're very exposed.
so that we improve their lives.
Yeah, absolutely.
And yeah, we will play our part, but the assets are just not there to take everyone back to where they were before the national disaster took place.
Yeah.
So we really have to work together and see how we can
I agree.
To-
I agree.
to get to a situation where our pensioners, our policyholders, have a decent livelihoods.
And thank you so much for those thoughts. And I just want to thank you for sparing your time in answering some very difficult questions and the enlightenment. I hope you managed to get one or two things. We're going to be giving you some prizes for listening. There were some suggestions that were suggested in terms of how insurance company can actually cushion themselves. I think if you're listening, I want you to be able to identify 3 of those particular strategies. Please go to the comment section, write through, then we will be able to reach out, we choose, and announce a winner in the subsequent program. So the prize we're going to be giving, please, you'll be able to see them on the screen. But you need some product to help you mitigate and manage your risk. That's the bottom line. Hyperinflation or not, the bottom line is you need to have some solution, because life revolves around risk. Every day when you wake up, there is risk. You run your business, there is risk. You can actually collapse. That's risky. You can die. That's risk. You can also be involved in an accident. You won't be able to work. That's risk. So let us think holistically, but most importantly, when designing products or thinking about products that we need to have, let's sit down, choose a professional who can guide you. And the role of Life Officers Association is to actually nurture this conversation around the importance of life products. Mr. Fai, for those who are hearing Life Officers Association for the first time, tell us in 30 seconds, what do you do?
You call any life insurance company.
Yeah.
There are financial advisors
Yeah.
there who will sit down with you, assess your situation,
Yeah.
and give you advice on what kind of products to take up.
That's true. All right. Thank you so much, Mr. Fai.
Thank you.
Looking forward to interacting with you in the next conversation. So if you have any questions, please, I want you to put them on the comment section and we will answer them in the next episode so that we're also able to clarify. I know a number of you are burning on loss of value and hyperinflation. Once you hear the comments and your feedback, and we're going to interrogate them in the next episode. Until we meet next time, stay blessed and keep learning.